All right, for this video, I wanted to go over IRS Form 6781, gains and losses from 1256 contracts, but specifically we want to look at how do we do a net Section 1256 loss carryback claim. So in the sample fact pattern we're going to be looking at here, it's a 2022 tax year where the taxpayer incurs a loss, and he's going to be carrying this back to his 2019 and 2021 tax years. So as far as what we have in front of us, I have the 6781 for the current period, and then we are going to be completing the carryback claim on the 1045. So when you do a 1256 carryback, you can either complete this 1045 to compute the decrease in tax, get your refund, or you can file amended returns for those actual years. We're not going to do that. We're going to just do the 1045 instead. So in addition to these items, I also have the 2019 original return for our taxpayer here. So you can see he had a gain here, and this is what we're going to be carrying back to. And then he also has gains for 2021 as well. So we'll go through these originals, we'll go through the amended 6781s, and then ultimately come back to this 1045. Now, in addition to the PDF documents, I do have two slides here covering some of the background on this carryback claim, and then again the fact pattern that we're going to be working with. So just some general background on these 1256 gains or losses. So Section 1256 contracts, both the realized gains or losses that you incur during the year and the mark-to-market amounts at the end of the year are split 40% short-term, 60% long-term, right? So that's kind of part of the appeal with these 1256 contracts. When you trade them, you get a 40-60 split no matter what the holding period really is. So when you report these amounts, they go on your 6781, and then they ultimately flow through to Schedule D. Right, so if I have a look at John's 2022 return here, we have the 6781, and if we had amounts that were flowing through, they would come through to Schedule D, and specifically they're reported down here on lines 4, right? So we can see short-term gains from 6781 there, so we have a line 4 amount if we had some, and then the same thing with the long-term being reported on line 11. Now in this example, John did have some losses for the current period, but we're going to be carrying all those back, right? So he's not going to have any net losses that remain for 2022. So I'll show you in more detail what that's going to look like when we get to it. All right. So if a taxpayer does realize a 1256 loss for the year, they might be able to carry back those losses and apply them against prior year 1256 gains. Okay. So if we look at Section 1212C2, the entire amount of the loss is carried back to the earliest of the taxable years to which such loss may be carried back, right? So we go back 3 years and then we move forward with any remaining losses and try to absorb as much as possible. And then to the extent not all of it is used, we just leave it in the current period where the loss was incurred, and then it goes to Schedule D, and then obviously if there's any carryover, they just go forward, right? Not backward at that point. So the amount that we can carry back cannot exceed your 1256 gains for the year. So what that means is you can carry back the 1256 losses to offset capital gains from the 1256 amounts, but you can't use it to just offset other capital gains. So if you sell stocks, bonds, if you sell some real estate and you have a capital gain, you can't carry back 1256 losses to offset those amounts. It can only be applied against other 1256 contracts. All right. So if we look at our fact pattern here, we have John, he trades stocks and bonds, 1256 contracts. And so he trades some during the 2022 tax year and has some large losses, right? So his brokerage statements for 2022 showed 1256 losses of $37,015. He also realized some losses on the sale of stocks, so $478, not too much there. And so when John looks at his return here, he sees that, well, I've got a lot of capital losses, and my deductible amount is just going to be limited to $3,000, right? And that's because that's the $3,000 limitation against ordinary income. And then the rest of it is just being carried forward. So he says, well, in looking at this, I would really benefit if instead of carrying forward these capital losses on the 1256 amounts, I carry them back. And so he looks at his prior year returns going back 3 years, and he sees that in 2019, he had 1256 gains of $650. In 2020, he didn't trade any contracts at all, right? So he had, let's say, no 1256 trades. In 2021, he had some large gains, $42,900, and then again in the current period, he took some losses. So he has $37,015 of losses, and he's going to want to carry this back to these prior years and try to get a refund. All right. So the next slide here, I've kind of summarized all of the activity that we're going to be seeing when we look at the forms. And I wanted to do this just so you can get a high level or kind of like a bird's eye view of what's going to be happening here. So in 2022, again up here, this is our current year, he's got $37,015 of net 1256 losses. And so that carryback claim goes back 3 years, and then it goes forward until you exhaust or use the entire loss amount that's being rolled back. So in 2019, he has 650 1256 gains, and he's going to carry, of this 37,015, he can use 650 to completely offset that amount. In 2020, he didn't have any 1256 gains, so this year is kind of skipped. But practically speaking, we have to show that we're looking at this year. So we're starting in 2019, we're carrying it forward to 2020. But again, we can't use any of the losses in 2020 because we have no 1256 gains. So after 2019, 2020, we get to 2021, and we use whatever's left over to offset all the gains in 2021. So after applying 650 of the 37,015, he has 36,365 left over, and that can completely offset the amount of 1256 gains for the 2021 year. Now, when he looks at his returns, and I recommend, if you have the tax software, if you did this in TurboTax or another piece of software, it's best to use that to recompute the amount of income and income tax. And then you take those numbers and transfer them over to the 1045 form. And that's what we're going to be doing. So the original TI, original taxable income amount, adjusted taxable income, and then the net change. And then the original amount of tax that was owed in the year, the adjusted amount of tax after we apply the carryback, and then the net refund amount. So you can see here, by carrying back the losses to 2019 and 2021, he's getting a tax refund from 2019 for $114, and then he's going to get a refund for 2021 is $64.74. All right, and so again, we'll look at the forms themselves and see kind of how these numbers are arriving. All right, so let's go look at the 6781 for 2022 first. So when you have a carryback claim for the year that you incurred the loss, you report the loss as you normally would. So we've got our 1099 from the brokerage account here. We've got our loss of $37,015. And then up here at the top of the form, you have to check the box for we are making a 1256 contracts loss election. And so that is letting the IRS know that, okay, we have losses incurred for the year, but we are carrying back either all or just or a portion of it, right? Depends on how much gain we have to carry back to. But we are carrying back some of these losses to prior years. And so we're going to have an adjustment on line 6 to kind of reduce the amount of loss that we are realizing for the current period, right? The amount that's going to flow through to Schedule D. Now, because John has enough gains to carry it all back, the amount reported on line 6 here is equal to the same amount. So we have a loss of $37,015. We're going to be carrying back the whole amount because we can absorb all of it. So we have a positive entry here, $37,015. And so when we look at line 789, you can see here that the amount of losses that are flowing through to Schedule D related to these contracts for this year are zero, right? Because we don't have anything left over for this year to record on Schedule D. Everything is being rolled back to the prior 2 years. Okay, so let's first have a look at his 2019 6781. So this is John's 6781 from the 2019 tax year. And so this is the original filing. So we can see again here, he's reported gains from his brokerage company, $650. There's the 40-60 split, so $260 was taxed as short-term capital gain, $390 was taxed as long-term, and then those amounts flowed up to his Schedule D, right? So we have his Schedule D here, there's the 260, and there's the 390. So what we're doing now with the carryback claim is when we prepare an adjusted or amended 6781, we look at the same form, right? So 2019 6781. We have an entry, right? Again, for the amount coming through from the brokerage company, $650. And when you carry back a loss, you had a separate line item and indicate or label net section 1256 loss carried back, and then specify the year it's coming from. So we have a loss realized in 2022, so we're indicating that this is carried back from 2022. Report the amount of loss that you want to carry back, and then we can see here that the net amounts are zeroing out, right? So now on the original return, remember, he had $650 of gain that was flowing through to Schedule D. Now he's got a loss that's offsetting all of it, so there's no gain that's being reported for 2019 related to the 1256 contracts. Okay, and so that is how we are lowering our taxable income. We're recomputing the amount of tax we owe, and then that's how we're getting our refund. Now the same goes for 2021, right? So this is John's original 2021 6781. In this case, he had two brokerage accounts, so he was trading multiple accounts. So we've got his gains there from each brokerage account, and then again we can see here that on his Schedule D for that year, he's reporting $17,160 of 1256 short-term gains, and then long-term amounts $25,740. So you can see that by doing this carryback, he's going to be able to eliminate quite a bit amount of his 2021 realized gains, that is. So he won't be able to wipe all of it out, but he is going to be able to get a big chunk removed so that he can get a larger, or get some taxes back from 2021. So if we look at his 2021 amended, again, we have the same entries at the top, right? So report the amount of gains that you incurred for the year, $32,600, $10,300 in gains, right? Those remain unchanged. But now we have, again, another entry here, net 1256 loss carried back from 2022 for $36,365. Now that we have the loss inputted there, look at the adjusted amounts for the year. So the net amounts, the net gain for the year, rather, now is $6,535. And then when we do the 60-40 split, we've got 40%. 2,614 is short-term gain, 3,921 a long-term, and so again, these adjusted amounts will flow up to his Schedule D, and it'll give us new adjusted numbers for your net capital gains for the year. And so that again is what's going to reduce his taxable income and ultimately reduce the amount of tax owed. And so that's going to increase his refund for those years. That's how he's getting these funds back. So now that we've kind of gone over the 6781s, let's look at how all of this kind of pulls together on the 1045. So the 1045 form, again, this is an application for a refund here, tentative refund. And so when we do a 1256 loss carryback, we complete the top information here. So again, so the form year should be the year in which you incur the loss, right? So 2022 is when we had the loss, so we're using the 2022 version of the form 1045. So we've got John taxpayer here, his address, social security number. And then on line 1, this is an application to carry back the 1256 loss. And then so we enter the amount of the loss that is being carried back. Okay, don't enter, if you have a loss but you're only carrying back a portion, just enter the portion that's being carried back, right? So in our case, it's all of it. But $37,015 was the 1256 loss that we're rolling back for the 3 years. And so that's that amount being reported there. Now for the 2022 tax return, John filed his 22 return on April 1st, 2023. Okay, so he did the adjustments here, right? So he did the adjustments here. He said, look, I'm carrying all this back. So he got his 2022 return finalized, and then he went ahead and filed it on April 1st, right? So that's fine. So April 1st, 2023. Now, the rest of these items here, we don't have NOL issues or any kind of these changes here, no accounting period variances. A lot of these will apply if we have corporate taxpayers, but in this case it's just an individual, so none of that applies. And then answer 7, 8, 9, yes or no, depending on what your circumstances are covering, right? So, we haven't filed any petitions in tax court. We don't have any decrease in tax because of reportable transactions. And then In question 9, we are carrying back a 1256 loss, but we don't have any foreign tax credit issues, right? So we don't have any foreign tax credits, so we don't have any release of foreign tax credits or other credits. So in our case, just answer no. Now the computation decrease in tax. So a lot of numbers here. Kind of slowly go through each column so we can follow how this is working. So when we have the 1256 loss carryback, remember it's going back 3 years, so 3 preceding years. So the first preceding year for us, and it should go left to right. So the earliest year starts here, 2019. So the first preceding year is 2021, second is 2020, third is 2019. And then it has 2 columns for each year, right? So before the carryback and then after. So before carryback for each year, these numbers should just flow through from your original return that was filed, right? So for example, if we look at the 2019 tax return, if we go to John's page 1 here, so when we look at John's page 1, the key numbers we're after here are adjusted gross income, so 8B. We're looking at the total amount of deductions, so that's a line 11A. Taxable income, line 11B. And then the amount of taxes owed, the $75.94 on line 16. So those numbers, you pull those numbers from the return and input everything here. So there we have his AGI for the year before the carryback. We have the total amount of deductions. We have his taxable income there. That should reconcile with the tax return. We have the amount of income tax he owed for the year, right? And this is really important. Remember, income tax is not necessarily the amount of the refund, right? So if I look at his 2019 return here, you're not putting down the federal tax withheld, not the $15K. You're not putting down the refund. You need to indicate how much tax he paid during the year. So he paid $7,594. So that's what that's what's being reported here on the 1045. Then in the after carryback claim, we report the adjusted numbers. Okay, so his AGI, how much did that change after the carryback claim? So you can see here, 65,650 and then 65,000. There was a reduction in $650, right? That was the reduction on the 1256 amounts, right? We lowered our AGI by $650. So again, I recommend using some kind of tax prep software to really prepare this because it'll help ensure that the numbers are more accurate. But you do the same for every single year. So we have our AGI adjusted, deductions as adjusted. How does that change our taxable income? How does that change our income tax numbers? And then do the same for each subsequent year. So the second preceding year, 2020, notice there's no changes here, right? So all these amounts remain the same because we had no 1256 gains for that year, so nothing can change, right? We just roll it forward again to the next year, 2021. All right. Now, the decrease in tax. So again, this is where we are reconciling now the total change in tax and then the amount that's going to be refunded to you. So in John's 2019 year, the amount of tax that he owed on the original return, $7,594. And then if we look at his amended filing here, on his 2019 amended return, again, it's amended in the sense we're fixing it, but we're not actually filing this return. The total change in tax now, $7,480. And so he's indicated $7,480 there, right? And so then we take the difference to figure out how much of a decrease in tax was there. So for 2019, not much of a decrease, right? Only $114, but that's again because he only had $650 of gain for that year. It's 2021 where we see a noticeable change, right? So the amount of tax that John owed in 2021. If we look at his original return here, I'll go to page 2 of the 1040. The total amount of tax that he owed, $14,950. And then if we look at his amended 2021 return, after we figure out that carryback claim, it drops to $84.76. So that's why, again, we see a massive decrease here related to that carryback claim. So 14,950, 8476. Take the difference there. So the decrease in tax for 2021 is $6,474. So the total amount of refund that John's going to get is going to be the combination of these two. So you can certainly see here how the 1256 carryback claim was massively beneficial, because if he did not do that, then the losses that he incurs for 2021 or 2022 rather would just be carried forward, right? Because he only gets the $3,000 limitation in the current period, and so he's not going to get much back. Now, as far as what else should be included with the 1045, at a minimum, you should include schedules that show the changes in the 6781s, right? So, like in this 1045, we would attach the 2022 6781. We would include the changed 2019 showing the carryback. Do the same for 2021. You should also include schedules that show the decrease or the computation of the decrease in tax. That's also advisable. I know some that they'll prepare the 1045 and just file copies of all the returns with it as a detachment, and that's fine. I suppose there's no harm in providing the IRS as much information as possible, just to, just so that it's abundantly clear how it is you arrived at these adjusted numbers. So, in other words, you could prepare kind of a pro forma amended 2019 and just send the whole form with your 1045. That would be appropriate. Okay, so that covers it for this video. I hope that was helpful. Again, if you have any questions, feel free to leave me a comment below. Happy to answer, and I can. But yeah, always be on the lookout for these types of tax planning opportunities, because 1256 contracts. Again, they're just treated as capital gains or losses, so they have those same limitations each year. But you can get a nice carryback claim if you didn't, in fact, have some large gains in prior years. All right, so that covers it for this video. Thanks so much for watching, and I look forward to seeing you on the next one. Take care. Bye.